Hey there, good morning. Today is Friday, August 14th, and I'm going to be talking about how the stimulus programs affect your taxes. So we're going to cover things from the EIDL, the PPP, unemployment, the stimulus check, and the new deferred payroll tax executive order that President Trump signs. All right, so the first thing we'll talk about is the EIDL loan. I get questions a lot. Is this taxable? How will this affect your taxes? So since this is a loan, it will not actually be taxable. Since you do have to pay it back, it's not income, it's not deductible. You can use it for whatever expenses that are qualifying expenses, and you can still deduct those expenses from your taxes, okay? The interest that you pay on this loan will be deductible. So when you start making payments, I know the payments are deferred for a year, but when you start making payments, there will be a principal portion and an interest portion. So the interest portion will be deductible. Principal portion is not, because you're just paying back the loan, okay? Hope that's clear. Now next is the EIDL grant. That grant is actually taxable. It will be considered other income. It's not part of your operating income, all right? So if you're trying to account for it on your books and you are more of an advanced user, this EIDL grant will actually go below your operating income line on the income statement. But either way, wherever you put it, it is taxable on your 2020 taxes, and you have to account for that, and you have to be prepared for that. And you also should be prepared to hit that subscribe button. Okay, so next on the agenda is the PPP loan. Now the PPP loan is a little more tricky, a little more complicated, so I'll break it down for you. First, since it is a loan, it is not taxable. Since you do have to pay it back, it is not taxable. And if you do have to pay it back, again, like the EIDL, the interest is deductible, the principal is not deductible, all right? Now, if you get your PPP forgiven, that completely changes everything. Getting your PPP forgiven will actually make it kind of like a canceled debt. And while it's not taxable as income, and, based on how the laws were written for the PPP, it won't be taxable as income, but any expenses that you use the PPP to pay for will not be deductible, which essentially means that it is taxable. Any way you slice the pie, it's the same thing, it's taxable. So something to be prepared for. Definitely be prepared to keep that in mind for next year when you file your taxes. And when you're saving money to pay your taxes and stuff, be prepared for the fact that the PPP is essentially taxable. Now, there are some bills that have been introduced in Senate and the House to change that. Because shortly after the PPP was released, the IRS released a notice stating and reaffirming, hey, even though Congress people have said that this PPP is not taxable, actually any expenses that you use the PPP for any forgiven amounts of PPP will actually not be deductible. So there are bills to hopefully correct this. Obviously, it's not a high priority right now because the year is still going. Senators and representatives are trying to still argue and debate and come to an agreement over the next stimulus package, which is more of a priority than figuring out the tax deductibility of these PPP expenses. To help you work through this, I'll give you an example. So let's say you got a $10,000 PPP loan. You use that PPP loan for payroll for your employees. If you get that loan forgiven in 2020, then your $10,000 that you paid your employee with that PPP loan won't be deductible. Now you don't want to reduce that number on your tax return. What you want to do is create a new account that's called like non-deductible expenses. And it's basically an offsetting account. And the reason you want to do that is because you want to keep your payroll expense showing the full amount so that you have proper QBI deduction and you have proper ability to budget for next year and all that stuff. The next example I'm going to talk about is if you get your PPP loan partially forgiven. Okay, so same thing, you get a $10,000 loan. Let's say you spend $5,000 of it for payroll and $5,000 of it for an unqualifying PPP expense, so you couldn't get it forgiven. Well, now the $5,000 that you spent on payroll, since that's forgiven, that $5,000 for payroll will not be deductible. The other $5,000 that you spend on other things, those expenses will still be deductible, but you do have to pay back the loan now. So the 1% interest that you have to pay will be deductible. Hopefully that's clear. And again, I'll keep you guys updated if there's any changes to the IRS tax code in terms of treating the deductibility of these PPP expenses. So the next thing that we want to talk about are the stimulus checks and the stimulus payments that you received and how that affects your taxes. So how these payments were structured were that they were a tax credit for 2020 that were advanced to you before the year ended. And the way they did that was they used 2018 and 2019 taxable income to determine whether or not you qualified for the stimulus advance. Now, if you made too much money in 18 and 19, you can still possibly get the advance when you file your 2020 tax return. So if your 2020 income was much lower than 18 or 19, or it was under the threshold that would qualify you for the stimulus payment, when you file your 2020 taxes, you will be able to get a $1,200 tax credit per individual on your tax return. That is how that stimulus package is structured. If you do make more in 2020, let's say you qualified for the advance from your 2019 taxes, and let's say your 2020 income is much higher, pushing you above the qualifying threshold, you don't have to pay the stimulus payment back. These credits are just set as a tax credit. You won't have to pay it back if you do happen to not qualify for it on your 2020 income, and it won't affect your refunds. It won't reduce your refunds in any way. And the same goes with the next stimulus check or stimulus payment that is in discussion right now. It should not affect your refund. You should not have to pay it back. And it's also structured as a 2020 tax credit that's being advanced to you before the year ends. So hopefully that all makes sense. Next is unemployment. A lot of people sometimes forget that just because you're receiving money from unemployment, you get the full $600 from the federal, you get some from the state, it's still taxable. So please make sure that you are having your taxes withheld from your unemployment payments, because if you don't, and you're collecting unemployment for 4 months, 6 months, whatever it is, you're gonna be hit with a huge tax bill once 2020 is over. So please, if you're not currently withholding taxes for unemployment, start doing so, and be sure to save money for next year to pay your tax bill. If you're already withholding money for unemployment, then great, keep doing that. But just a huge reminder that any state unemployment, any federal unemployment assistance, whether it's the $600 per week that we already went through, or any future federal unemployment assistance, will be taxable. So the last thing I want to talk about are the payroll tax deferrals that were just introduced via executive order by President Trump. So there's still a lot of questions about this. The US Chamber of Commerce has written a letter to the senators asking to give them guidance on how to implement these payroll tax deferrals. There's a lot of things that are unclear. So first, we know that people who make about $100,000 or less will qualify for the payroll tax deferral. We also have an idea that the payroll tax deferral will be for the employee portion, not the employer portion. Just as a reminder, payroll tax for the employee portion is 7.65% of your gross pay. We also know that these deferrals will start on payroll wages being paid as of September 1st through December 31st. Okay, so for that 4-month period, that's when your payroll taxes will be deferred. Now, some new things we found out is that it is optional. So employees can elect to have their payroll taxes deferred or not. What we don't know is how will they be able to do that. What we don't also know is how they'll be able to pay it back. My guess is that if employees do elect to have their payroll taxes deferred, it will be paid back when they do their 2020 taxes during tax time. And so if that's the case, and if you do choose to have your payroll taxes deferred, another thing to be prepared for is a tax bill once you prepare your 2020 taxes. And then the executive order did state that he will pursue avenues to get these payroll tax deferrals forgiven, but it seems like both sides of Congress, the House and the Senate, are really not interested in that kind of deal. So I would not count on that. I would not hold my breath for that. Okay, I'll post a link below in the description to the letter that the Chamber of Commerce sent to senators. Read it for yourself and form your own opinion about what you think might happen. Okay, that's all I got for today. Thanks for joining me. If you enjoy the content of this video, please do smash that like button. And if you're new here, thanks for joining us. Hit that subscribe button to stay up to date with anything pandemic related, IRS related, SBA, all these stimulus programs, trying to keep everybody up to date as often as possible. And have a great weekend. I'll see you guys on Monday. Take care for now and stay safe.